The ongoing Israel-Hamas conflict has raised concerns about its potential impact on financial markets and investments. In this video, we will explore the current market reactions and discuss the potential ramifications of the conflict on various assets such as stocks, gold, forex, and oil. Additionally, we will analyze the role of Iran in its potential involvement in the conflict, as well as the implications for defense stocks. Despite the turmoil caused by the conflict, the initial market impacts have been limited. When the markets opened on Monday, stocks actually traded higher. While gold prices initially jumped, they have since seen consolidation. Similarly, oil prices have not experienced significant follow-through or continuation. The dollar index has been declining for the fifth consecutive day, with the exception of the dollar-yen pair, which has continued to move higher. The Israel-Hamas war could have significant ramifications if other regional players, particularly Iran, become involved. The main focus is on Iran, as official condemnation for its alleged involvement in planning the Hamas attack could lead to tightened sanctions. This, in turn, would drive up oil prices. Over the past year, Iran has increased its oil production by 500,000 barrels per day as part of the easing tensions with the US. Goldman Sachs estimates that for every 0.1 million barrel per day cut resulting from sanctions on Iran, oil prices would increase by $1. Furthermore, if relations between Saudi Arabia and Israel cool, it could also negatively impact oil prices. However, it is worth noting that the relationship between Israel and Arab states has improved over the past few decades, reducing the risk of another Arab oil embargo similar to the one experienced in the 1970s. During that time, oil prices quadrupled. Given the potential deepening of the Israel-Hamas-Iran conflict, there are several investment opportunities to consider. Investing in treasuries, gold, oil, and defense stocks could be viable options. Rising interest rates in the US in the flight to quality safety, along with significant short positions in treasuries, could lead to a potential bottoming out of treasury prices. Lower treasury yields are bearish for the US dollar and bullish for gold. Gold, often considered a safe haven asset, could benefit from the conflict as investors seek a store of value. Additionally, any escalation involving Iran could further boost gold prices. If Iran becomes more involved in the conflict, oil prices are likely to rally. This could benefit oil stocks. However, it is important to monitor the situation closely, as a prolonged conflict could have unpredictable effects on oil prices. With the Russian invasion of Ukraine and the Israel-Hamas war, there will likely be increased demand for weapons. This could benefit defense contractors, making defense stocks an attractive investment option. While the Israel-Hamas war has initially had limited impacts on financial markets, the potential involvement of Iran and other regional players could lead to significant ramifications. Investors should closely monitor the situation and consider investment opportunities in treasuries, gold, oil, and defense stocks. Fundamentals play a crucial role in trading and investing, so it is essential to stay informed and make informed decisions based on market dynamics. To learn more about using fundamentals to trade forex, gold, and US 30, subscribe to our channel for additional updates. As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.